The U.S. income tax system, it's based on two main assumptions. One, voluntary compliance, which refers to the principle that citizens will cooperate with their government by filing honest and accurate annual tax returns. You can see why I called it an assumption. Voluntary in this case implies that the individual taxpayer will prepare and file a return without proactive action by the government. So the government is not going to come and knock at your door. Payment of income taxes is, of course, mandatory, but the burden of reporting income falls upon each individual taxpayer's shoulders. This is the meaning of voluntary compliance. The government expects and assumes that U.S. taxpayers will be forthcoming in calculating and reporting their incomes and will remit any unpaid amount to the government by the tax deadline each year. Why did the U.S. government come up with this assumption system? Because it discovered early on that auditing and monitoring every individual tax returns in the country, it's impossible. Therefore, it must assume that taxpayers will voluntarily comply to the best of their abilities. Of course, the government doesn't just generally take the taxpayer's word for it. They have to somehow verify, right? For example, a taxpayer who receives a W-2 from its employer should report the income to the IRS by filing the Form 1040. But on the other hand, the IRS also receives a copy of that W-2 from the employer directly, and it's already aware of that income. So when you file, it just compares. An individual may also have a business, like us, that does not involve a W-2 or a 1099, which is normally what it's used by contractors. So in that case, the government still has to verify somehow randomly, right? Under the principle of voluntary compliance, the taxpayer is expected to report that additional income in the annual return, no matter what it comes from. Two, the second and less optimistic assumption of the U.S. tax system and the government is that some portion of the tax-paying public will not fully comply with tax requirements. So they are going to lie. They assume that. The government is also aware that this may occur either by intentional evasion or through an innocent misunderstanding or an innocent mistake. Therefore, the IRS is responsible for enforcing compliance and thus so through a system of audits. Let's talk about audits and voluntary compliance. In the early days, around 1913, U.S. law required that every tax return to be audited by the Commissioner of Internal Revenue's office. This soon proved to be an impossible task, even as they got more people working for them. So in 1954, a law removed the requirement, and since then, audits have been undertaken on about 1% of returns each year. The government's implicit acceptance that it does not have the resources to audit everybody and never did helps define voluntary compliance that we talked about. Compliance is voluntary because total enforcement, it's impossible. Audits are often triggered by a mismatch in the information reported on a tax returns, and so it's a mismatch between what you say on your tax return and what it says on a 1099 or W-2. So those are red flags. Other red flags include, seeing some discrepancies between what's your income now and the income in your past years, or if, for example, one of the companies you do transactions with, it's under audit, you may become under audit too, your company, because you are conducting business with that company who's audited. So that's how normally audits happen. But like I said, only 1% of taxpayers, and that includes individuals and businesses together, and there are millions of them in the United States, only 1% of them get audited per year. Now, of course, you want to have everything in order, all your paperwork, all your tax returns from previous years. You have to have, your 1099s, which you normally use when you work with contractors or vendors, and that's probably the format you're going to use the most in your business. So all those things, you have to have them documented very well, just in case an audit may appear. But again, keep in mind that if you do the voluntary compliance part that the government assumes, and you literally just file taxes on time, and you do the best you can, then even if you do get audited, even though the chances are low, but let's say even if you do get audited, everything should be just fine. So I wouldn't be scared of audits as long as you have everything very well organized and very well preserved.